This is Dan Zwicker. Today I'm going to take a look at the seasonal tendency of December corn futures. I got a couple different charts, how I'm going to take a look at this, and we'll kind of go from there, and I'll give you some summary of what I think a producer, how a producer could use these charts here in their marketing plan. Now on the first chart we have here is the months that December corn made their calendar year high over the past 36 years, starting from 1978 all the way to last year, 2013. What I've done, I think, to kind of make it more simple is grouped them into 3 4-month blocks, and this is down along the bottom here. During the first 4 months of the year, you have a tendency to make the calendar year high 33% or a third of the time. Then the middle 4 months, basically the prime growing season, planting and growing season of May, June, July, August, about half the time the market will make its calendar year high during the summer months, and then about 20% of the time, or 1 in 5 years, the market will make a high during the September through December time frame. To kind of sum them up fairly quickly, what it says here is that in real bearish years, when we have large supplies and the market perceives supplies as growing, with large acres, normal weather, markets will have a tendency to peak here during the first 4 months of the year, anywhere from January through the April time frame. You can see last year was one of those years where December corn futures made a high early in January and basically moved counter-seasonal throughout the whole year, basically declined all the way into December. And you can kind of go back and look at the 80s when we had large inventories of inventory around with big, huge grain stocks, grain reserves, and whatnot. Markets had a tendency to peak early in the calendar year and then drift lower. When you get into maybe kind of a real tight, snug supply of inventory where the market is worrying about having enough grain to meet demand levels, then you have a tendency to have highs during the middle part of the year. Is basically until the crop is planted, and then until the June rains come or early July rains come, the market will make a high. And you can kind of see here during the years when the market was, when we were growing demand from ethanol, starting here basically you can kind of look here in 05, 07, 08, 09. The markets kind of peaked in this June-July time frame, and then they declined as we went into the fall months. Now, when you get in years where you get into severe weather problems during the summer months and the overall crop shortens up and we have to go into a rationing mode, then the markets will have a tendency to make their highs during the last 4 months. And it kind of goes along with the old trader's axiom: short crops peak early in the marketing season and have a long tail. So we have 3 groups of basically how the market performs through the growing season. Last year was very bearish. People were looking at building stocks. 2014 is going to be one of these years where if everything is normal, even with a drop in corn acres, we're going to be building inventories. So the odds, at least when you look at it from that point of view, is that December 14 corn futures, at least initially here, is going to maybe could have a high early in the calendar year or during the first 4 months of the year. Now, once we get into April and May, planting season, the market will then begin to respond to the planting season. If we have an extreme weather pattern, if it's too dry, too wet, whatnot, then some of that bearishness of building stocks will be erased from the trade, and the market then will have to respond to that, maybe with higher prices during the May, June, July, August time frame. So we'll have to kind of take each month at a time as we go through the year. But for the most part, what I would tell someone is you need to probably have upwards of a third of your crop kind of sold prior to planting. Then as you get the crop planted, you can begin to peel off more inventory. If the crop begins to look better and you begin to get a little more comfortable with your crop prospects, you can peel off another increment. But really this thing kind of tells you by middle part of July, unless we're in a major weather scare, you should be fairly aggressive sellers of your inventory. Maybe take your inventory sales as high as 70%. We still don't know exactly what the overall yield is, so we kind of hold back 30% to see what the remaining part of the growing season is all about, and whether or not then that inventory could either be sold after harvest or maybe into the following spring of the next year. The next chart I show you is basically is a 30-year average of December corn futures. This is when you take each day, stack them up, and divide by 30. This is what an average price pattern of December corn looks like. Now, in this case, I changed it all to percentage change from December 1st. So this is a percentage change chart, but a price chart would look the same way. Corn market has a tendency to pull out of an early December low and then strengthen as we go through the months of January, February, March, into the planting season, and then on into a June, July type high. If the rains come across the Corn Belt during the pollination period, then the market has a strong, very strong seasonal tendency then to decline as you go into late July, early August, in front of the August crop report. Depending upon what USDA says at that point in time, a lot of times the market will have what we call as a pre-harvest bounce. We'll maybe have a rally into September, early September, but once the combines begin to really get active and spread across the Corn Belt, the seasonal tendency of December corn futures is to just basically collapse during the last 2 weeks of September into the first 10 days or so of October. And that is when you normally make a harvest low if everything is considered somewhat average. Once that October low is in place, the markets then have a tendency to have a recovery rally or post-harvest recovery rally into the November time frame, and then the market then has a strong tendency to dip back into that early December period on weakness primarily driven by December deliveries, the expiration of December corn deliveries, and we then begin to get some year-end harvest sales. So that's the way one kind of takes a look at the seasonal tendency of December corn. If you have any questions on this, please feel free to get a hold of me or get a hold of one of our CGB grain merchants that you deal with when you sell your grain. They would be able to help you understand some of the seasonal tendency and how that might fit in to your overall marketing plan.